Imagine, there are two guys, both of their salaries $100,000 per year. 10 years later, one of them has a luxury car, a luxury watch, and a perfect life on Instagram. The other one drives a 10-year-old Toyota, lives in a simple house, doesn't wear any branded clothes. If I ask you, which of these two is the real millionaire, 99% of people will give the wrong answer. And the most shocking part? After studying thousands of millionaires in America, they found a strange pattern. Many millionaires never buy a luxury car. Because the day you start spending your wealth to show it off to others, that day you stop building wealth. And maybe the person you think is poor is actually richer than you. Today you'll find out why the wealthiest people in the world live the most boring lives, and why being boring is actually the secret to getting rich. In finance, there are three words that confuse people the most: rich, wealthy, and financially free. All three sound the same, but their meanings are completely different. Rich means high income. Wealthy means high assets. Financially free means your assets pay for all of your expenses by themselves. That's why a doctor who makes $500,000 a year but spends every dollar, he might be rich but not wealthy. On the other hand, a school teacher who kept investing a little bit every month for 30 years can become a millionaire. And this isn't just theory. A study of 10,000 millionaires in America showed exactly this. Most millionaires didn't come from inheritance, not from the lottery, not from overnight success. They just did three boring things: spent less than they earned, invested regularly, and had patience. But here's an interesting twist. If you only look at income, then you'll often think the wrong person is rich. Imagine three friends. The first makes $300,000 a year, but spends every dollar. The second only makes $80,000, but buys assets every month. And the third doesn't even work anymore because his assets pay all his bills. Now tell me, who looks the richest? The first one. But who's the wealthiest? The second one. And who's the most financially free? The third one. And this is where most people make their biggest mistake. They look at income, not assets. They look at lifestyle, not net worth. That's why they spend their whole lives chasing the race of looking rich, but never actually become wealthy. Now the question is, if the formula is this simple, then why don't most people follow it? The answer isn't in finance. It's hidden in psychology, and that is the most dangerous trap. Now, here's a question. If the formula to get rich is this simple, then why don't 90% of people follow it? The answer isn't in finance. It's hidden in psychology. Because our brain wasn't designed for long-term rewards. Our brain wants instant rewards. That's why, as soon as the paycheck comes in, we don't think about investing. We think about a new phone, a new car, new shoes, or one more online order. Every time you buy something new, you're not just buying a product, you're buying a feeling. And this is where companies win. They don't need to sell you a product. They just need to sell you status, sell excitement, sell validation. And our brain, every time, happily falls into that trap. For a few seconds, we feel more successful than before. But a few days later, that same excitement disappears. Then we want something new again. And then something else. And then something else. This endless cycle is called hedonic adaptation in psychology. And here's the most dangerous part. This trap doesn't just catch average people. Doctors, celebrities, athletes, and even millionaires get caught in it too. That's why some people are happy even making $50,000, and some are stressed even making $500,000. Because the problem isn't low income. The problem is bad money habits. And until you control your spending, no salary will ever be enough. Now let's say your salary went up. Before, you made $4,000 a month. Now you make $6,000. Does that mean you've become rich? Not necessarily. Because an invisible trap is waiting for you. It's called lifestyle creep. As soon as your salary goes up, car upgrade, phone upgrade, apartment upgrade, vacation upgrade, and slowly every raise disappears into spending. And here's the most dangerous part. All of this happens so slowly that you don't even notice it. That's why a lot of high-income professionals are still living paycheck to paycheck today. Income went up, but not savings, not wealth, not freedom. Rich people grow their income, but wealthy people grow their savings rate. And that small difference becomes a huge gap 10 years later. Now let's talk about the force that is the most powerful wealth creator in the world: compounding. Imagine you invest just $500 every month. No lucky stock, no crypto, no trading. Just a simple index fund. For the first few years, it'll feel like nothing's happening. And because of that, most people give up halfway through. But compounding is like a snowball. At first, it's small, slow, almost invisible. But the more it rolls, the bigger it gets. Wealth builds exactly the same way. In the beginning, time matters more than money, and later on, money starts growing faster because of time. That's why most of Warren Buffett's wealth wasn't built by his investing skill, it was built by his time. He didn't try to beat the market, he made time his most powerful partner. But time has a second face too, one that every year quietly eats away at your wealth. It's called inflation. It's a thief that doesn't come to your house, doesn't rob your bank or your wallet, yet every year, it steals the buying power of your money. If your money is just sitting in a savings account, then you're not safe. Every year, inflation slowly reduces the value of that money. That means $100 today that can buy something, 10 years from now, that same money might only buy $75 worth, or even less. And here's the most dangerous part. You don't even see this theft happening. That's why just saving isn't enough. You have to grow your money too. That's why wealthy people put their money to work. They don't work for money. They make money work for them. And this difference is something average people never understand. But just investing isn't enough either, because the market doesn't always move in a straight line. Sometimes it goes up, sometimes it drops sharply. And this is where wealthy people separate themselves from average people. Before investing, there's another boring thing every wealthy person has: an emergency fund. Imagine tomorrow morning you lose your job, or your car breaks down, or a medical emergency happens. If you don't have 3 to 6 months of an emergency fund, what happens? You'll be forced to sell your investments at the wrong time. And usually, people sell when the market is down. That's the biggest mistake. An emergency fund isn't meant to make a profit. It's meant to keep you from making bad decisions. Wealthy people build safety first, then speed. And history, too, teaches us the same thing. The 2008 financial crisis, the COVID market crash. In every recession, there were two kinds of people. One, out of fear, sold everything. The other stayed calm, stuck to their strategy, and, wherever possible, kept investing. Today, among successful investors and millionaires, you'll find a lot of people who didn't fall apart in a panic. They followed their strategy, not their emotions. And maybe that is the biggest difference between wealth and average investing. But there's another mistake people make over and over. They think of everything they buy as an investment. In reality, not everything expensive is an asset. This is where rich and wealthy people's decisions start to differ. Now, remember this simple rule. Not everything you buy is an asset. An asset is something that puts money in your pocket. A liability is something that takes money out of your pocket every month. A rental property can be an asset. Dividend stocks can be assets. A business can be an asset. But a luxury car that asks for insurance, maintenance, and a car payment every month, that's not an investment, that's an expense. This difference shows up in the decisions of rich versus wealthy people. And this difference leads to another result. Cash flow. Most people only look at their salary. Wealthy people look at cash flow. If you didn't work tomorrow, how much money would still come in? If the answer is 0, then you have income, not financial freedom. Real wealth begins when your assets generate income even while you sleep. That's why wealthy people always put a portion of their income into buying assets. And that's why they don't depend on just one income, salary, dividends, business, rental, digital income. The more sources of cash flow you have, the more financial security you have. And when your expenses are paid by your assets, not your salary, then you're not just rich, you're truly financially free. And maybe this is the biggest lesson of this entire video. Wealth isn't built by luxury. Wealth is built by daily habits. Spending less than you earn, investing regularly, building an emergency fund, buying assets, and the hardest thing of all, having patience. That's why Warren Buffett once said, the stock market transfers money from the impatient to the patient. And this isn't just true for investing. It's true for life too. From today, whenever you see a luxury car or see a perfect lifestyle on social media, just ask yourself one question. Is this real wealth or just the illusion of real wealth? Because what you see is usually spending, and what you don't see is wealth. Real wealth doesn't make noise. It's built every month through one right decision, one investment, and one boring habit. And one day you realize that you didn't just get richer, you became financially free. And maybe that is real richness. Before you go, always remember one thing. The people who look rich often spend their future to impress others today. But the people who become truly wealthy quietly build a future that no one can see. So, what will you choose? Looking rich or building wealth? If you want to understand money, investing, economics, and human psychology in a simple and practical way, then subscribe to Acorn Theory. Here, we don't teach hype, we teach reality. Not quick money, long-term wealth. And remember, wealth isn't built the day you get your paycheck. Wealth is built every day when you make the right decision about that paycheck. I'll see you in the next video.